everybody. Welcome back to Monday with Molly. I'm Andrew Kosselman here with Molly Dean and the Molly Dean team. How's it going, Molly?
You know, it's getting warmer out.
It is getting a little warmer out. There's some changes in the season, but there's also a really big change in our business that just happened. It's kind of confusing because there wasn't a ton of great information that came out with it, but why don't we break down for folks the new FHA monthly PMI changes that got made.
Okay.
All right, so we've talked about PMI before.
Uh-huh.
Give me just a quick little crash course reminder of what PMI is.
If you don't put down 20%, the lender charges something called private mortgage insurance.
Right, and the purpose for that is to basically protect the loan program itself, the investor, the lender, in the event something happens to the loan,
Yes.
right? Now, one thing we've definitely talked about before is conventional and FHA, PMI is a little different.
It is.
Something about FHA is it's fixed, right?
It's the same amount.
It's the same amount.
Regardless of credit score.
So tell me a little bit about what FHA recently did.
They lowered their monthly. So they lowered it $30 per 100,000.
Big deal.
Big deal.
Really big deal.
Lots of savings.
And
it doesn't matter what your credit score is.
Right. That's another thing that FHA has over conventional
Right.
is you can be an FHA borrower with an 800 credit score or a 620 credit score, and your PMI is going to be the exact same depending on how much money you put down.
That's correct.
Okay, so is it just because PMI can come in different tiers? So 3.5% down versus 10% down, right? FHA changes that.
It'll be cheaper
Okay,
if you put 10% down.
and they changed everything across the board pretty much.
They did. So it's $30 at 3.5% down cheaper.
Right.
It's $30 at 10% or more, but it's just lower at 10% or more down.
Right.
But it's still $30 cheaper than what it was previously
And
for 100,000.
If somebody wanted a skip to this part of the video to get the nuts and bolts of what we're talking about, FHA loans just got more affordable.
Much cheaper. I mean, I calculated a borrower yesterday, and we're saving him $55 a month based on his loan amount from what it was in February.
Absolutely.
Yeah.
And beyond that, even when we think outside the box, that kind of, maybe we had somebody, we pre-approved it like a max debt to
That's
income
correct.
ratio.
Mhm.
Now we might be able to get a little bit more loan approval
Correct.
because we have a little less mortgage insurance,
That's
right?
correct. Mhm.
So is this retroactive? Is this moving forward? How does that work?
It's basically as of moving forward. It's loans endorsed on the 21st, so we're honoring now.
Yeah.
This endorsement can happen after that time.
So if somebody got an FHA loan like maybe a year or two ago, is it something they should call us about and maybe talk about?
That's going to be difficult to say because interest rates are higher.
Right. So I wanted to bring that up as well. Just because this has happened doesn't mean everybody should rush out and say.
That's correct. It's new endorsements.
New endorsements, right. But if you have a question about it, what should
Call
they
us.
do? Call us. Right?
Yeah, absolutely.
Pretty simple.
Worth checking into.
Yeah. Because beyond that, sometimes after you've been in a home for a little while, maybe you were FHA, we can look at maybe going conventional, which
We
has
can.
obviously completely different rules to it whatsoever. So
Yep.
that's all I have for you today, Molly.
Well, that's easy.
Yeah.
Happy Monday.
Have a great week.